What I'd like to do next is just provide you a snippet, so to speak, of one of our sample weekly video presentations. I'm going to go back to Saturday, August 9th. Again, these reports are available every Saturday. And I'm going to look at our weekly video for pound yen. I'm going to give you the first roughly 4 minutes of the presentation. For this particular week, the file on pound yen was about 10 minutes in total. We looked at the intraday charts. In our chart review, we look at the monthly, which is segmented off into a separate file because we only update it once a month, of course. But the weekly market forecasts comprise a weekly chart, a daily chart, and for most of the markets we look at, we're available an intraday chart, typically the 2 hour. So every week we're guaranteed to look at least at 3 charts. Just in terms of price charts, that's on top of 9 individual COT-based charts for each of the markets. So I'm going to just play you the first 4 minutes of the feature for pound yen, dated Saturday, August 9th, 2008, and hopefully this will give you a bit of a feel for the kind of presentations we provide. The important point here, interestingly enough, this example does not reference any COT signals. There is no COT data available for the pound yen cross pair. And as the only cross pair we cover, that's typical. Now, it's important to realize here that sometimes COT signals fit the context, other times they don't. Other times we don't get any meaningful information from the futures realm at all. We're not getting those high-level divergences we're looking for. But that's the reason of combining our approach with Elliott wave, because even without COT signals, or at least ones that we can work with, we always have this core structurally based analysis that we use to look at price action and assess where the market's going. So without any further ado, let's just play you the clip from a couple of weeks back. What we've been looking to do here with pound yen for some time on the weekly chart is be able to call a wave 4 top. You can see the count. No, let's go back even further. We had the end of our advance here in this market going back to July last year. That was the top at what appears to be now a very lofty level above 250. We've had wave 1 down, wave 2 down, wave 3 subdivided or extended into 5 smaller waves, 1, 2, 3, 4, 5. So we've been correcting ever since then. And this latest Fibonacci structure marks the start of wave 2 with the start of wave 3. And so what we're doing here is looking at the levels that we're now well into the Fibonacci target zone. Okay, the target zone is comprised of these 3 levels, the 38, 50, and 62 fibs. So we've noted this. We're into that target zone, so it doesn't necessarily have to go higher. 4 is still a question mark for me. I don't know with 100% certainty whether wave 4 is finished, but you can see that's what we're looking for. This rise that's going back to now to March. March was a very pivotal month this year, of course, for all these markets. The rise since March, it could be done. I've tried to call a top a couple times now and had some difficulty doing that. But you can see that if this is the end of wave 4, well, we should have a wave 5. Wave 5 is down. Theoretically, it should take out the old lows at 192.56. So I'm holding to that view, notwithstanding the the recent rise of the yen and stuff, recent strength in the dollar. 1, 2, 3, 4, 5 is down. Now the other thing we have to look at, 200 EMA is providing kind of a resistance barrier here, more or less, if we blow this thing up a little bit. And so is this level I marked previously, 214 and change. That is the top of this previous wave 4 of 1 lesser degree. Do you see that? Price level here, 204.7 to the top, 214.04. So the textbook tells us that when you've completed a 5-wave move, which we did here in March, that the target area for the retracement is into the prior wave 4. We came up just a little bit above that. It's almost like the market wanted to take it up to the next fib level, which was 216.97. But that's a spinning top, which is a signal of indecisiveness or ambiguity, whatever you want to call it. I think Steve Nussin does a much better job explaining that than I do. But this is indecision here, folks. The spinning top candle, right on the old resistance level, 214, a little shy of the next fib level. Our weekly SMI is certainly topping out. It looks like it's turning over bearish now. So I'm cautiously optimistic that this is the top of wave 4 and that we should not see any more major advances in this market. I don't know with 100% certainty if that will prove correct. That's just, again, we have to focus on the probabilities and we have to be aware of the make or break levels. What's a make or break on the weekly? This price right here, the week of July 20th, the high at 216.20. If this thing now finds support and rockets back up above 216.20, we know that we have to invalidate this wave 4 count. But right now it seems to be holding. 214 is resistance, seems to be holding. Okay, and on this week's close we came down to 211.62. That's the close on Friday, well below that resistance high. So that's what I'm looking for. 1, 2, 3, 4, 5 should come down nice. All right, that brings us to the final slide in our presentation. I'd like to just spend a moment talking about how we think our product will help you. First of all, I want to give you a deeper understanding of COT and how to trade it than is available anywhere else. We want to be able to identify high probability, high impact reversal setups in the market, and though performance promises cannot be provided, in other words, we can't guarantee you any specific result, when you see these high level reversals, particularly as documented in module 3 of our course, where we're talking about a major setup short after the November 2007 high on pound USD and how the ensuing down move was worth thousands of pips potentially, you can see time and time again that the best, highest quality impactful reversals in the market are often predicated by COT and or Elliott wave analysis of the kind we use here in our course. We want to help you avoid the common mistakes and pitfalls that some newer traders or people not totally familiar with COT will make. Typically that involves jumping into the market too early just as soon as they see a signal. We want to help you avoid those kind of pitfalls. And the core underlying belief here, again, as I've already alluded to, is that by using two contrarian market indicators, commitments of traders and Elliott wave analysis working together hand in hand, that will give you the highest quality reversal signals available. If you'd like to find out more about our course and or service, I would invite you to visit us at forexmentor.com/COT. There we provide a very comprehensive, very detailed listing of the course contents and also some video samples and so forth. So I hope you've enjoyed this presentation. I'd just like to thank you for taking the time out of your busy day to join us. I hope this has piqued your interest, and if there are any questions I can specifically answer for you, feel free to send me an email, frank@forexmentor.com, and I'll get back to you within 24 hours. Thanks again, and I hope to talk to you soon. Bye now.